Hello, good morning. Happy April. I hope everyone had a great Easter weekend. And I wanted to come on this week and talk about account reconciliations. So I know they're not the most um, exciting thing to do, I guess is the way to explain it, in your business finances, but they're very important. And there's a few different things that need to be reconciled. And I want to go over what accounts you should reconcile, how often, and why. So, your main accounts that should be reconciled every month is your checking accounts, your savings account, your credit cards. You're looking for errors and omissions. You're looking to see if you're missing any income, if the bank feed has pulled through more than one time, so you have too much income, or same with expenses. Are you missing some expenses? Are some duplicated? So when you run your reconciliation, you go in and you select everything that's on your bank statement. Your beginning balance should match with the prior month end that you've already reconciled. And then anything that is not selected, those are things that you should be looking at. Is there a check that you mailed to a vendor that got lost in the mail? It's been a few months, they have not cashed it. It's time to check in with them and see why. Did they not get it? If they didn't get it, do you now owe interest or late fees for not paying it on time? Because just because you sent it, if they don't get it, then they don't consider it paid. So that is one thing. Is there a charge that is showing up maybe as a credit card charge that you didn't put it on that credit card? You actually put it on your debit card. And so you've already reconciled it through the bank feed on your checking, and it's just sitting out there on your credit card feed. So those are things you need to look into. Don't just automatically delete them because maybe that check, that vendor is just holding it on their desk until they have a decent amount to go to the bank. I have worked with vendors that they only go to the bank like once a quarter. I don't know why, because not putting it in your bank account, something can happen to it. It gets accidentally tossed when someone cleans the desk. It gets misfiled somewhere. So you can't just automatically delete them. You have to figure out why they're there. Then again, that's your checking, that's your savings, that's your credit cards. Those should be monthly. Your accounts payable should be reconciled whenever you get a statement from the vendor, or at least once a quarter, call and ask how much you owe. Not all the vendors send out statements anymore, or it could get lost in the mail if they mailed it. It could end up in your spam folder if they emailed it. Always check your spam. I recommend checking your spam folder at least daily anyway. Because there could be things hanging out in there that isn't spam that you really need. So accounts receivables, you should be checking through those at least monthly to make sure that you know who owes you money, how old those receipts are. Are they up to 60, 90 days? It's harder to collect when they get that old. So you want to be staying on top of that, seeing it, making sure you know exactly who owes you money, how long they've owed you that money, sending them a statement, making a phone call, dropping a quick email, whatever you need to do for just, hey, checking in, reminding you. And it also helps you find out if you accidentally applied payment to the wrong invoice. You ever have that happen where did a couple of jobs for $1,500 each, and John Doe's check came in, but it actually got put on Jane Smith's account? Those are things you want to watch for. Because if you're going through and you're like, God, I swear Jane Pat still owes me, then you can look at that check and go, oh, I put it on the wrong one, and clear that up. So those are ones to do monthly. Ones to do quarterly is your payroll taxes. You've got to file your 941. So do a check on if everything ties out for the taxes and the payroll. Run those numbers, check it against your account, and make sure that what you think you owe is what is showing in that liability account for you to pay. Then the inventory. If you have an inventory that is an actual inventory, not a cost of goods, but an inventory where you're bringing items in for resale. You're bringing in parts A, B, and C, and you sell them as parts A, B, and C, or you bring in parts X, Y, and Z and you sell them as a package. A lot of times that ends up happening if you are somebody that does like corporate gift baskets. I don't know if you can hear the cats in the background. I apologize if you can. So those need to be reconciled. And again, the reason you're reconciling, you're catching any errors. If your inventory is off and you haven't accounted for everything, come year end, you're not going to be paying the right amount of taxes. You're not taking the right amount of expenses that you can take off of the income. So you want to make sure those are accurate. You want to make sure, again, you're not missing anything. You don't have something entered incorrectly. You don't want to pay taxes because you accidentally had an extra zero on an inventory item, so it went in as $1,500 instead of $150. So those are the things you are looking for. You're making sure. Fixed assets, you're going to be reconciling that once a year because when you do your taxes, you're going to find out your depreciation amounts and you want to enter them for the next year so that your fixed assets are proper, which gives you a proper balance sheet. Because if your assets are wrong, then when you take your liabilities and subtract it, your equity, your value of your company is going to be wrong. So those are things to look at and reconcile. If you have questions, go ahead and give a call. Set up a time to chat and let's walk through and make sure that you've got everything taken care of. And one thing I want to point out, if there is something off on your reconciliation, QuickBooks offers you the chance to just say it's a reconciliation discrepancy. Don't do that. If it's a penny or two, then it's not going to be worth your time. If you're going to spend an hour and your time is worth $100, $150, $200, it's not worth that penny. But if it's a couple $1,000s, you need to figure out why it's off. And you need to correct it outside of a bank or of the reconciliation discrepancy account. Because then is it because your income was too high? Your did something get deleted in a prior reconciliation period, so now the beginning balance is off? The ending balance is off? Whatever it is, maybe it is that you entered that inventory item as 1,500 instead of 1,500. You don't need a $1,350 reconciliation discrepancy. You just need to find where that $1,350 is at. So reach out with questions. Let's get you on track, especially with the new year. Let's keep the books clean and be on top of them. So come year end, your stress is down. You don't need to worry and you're ready to run taxes without having to do a big cleanup during something that'll probably be the worst timing, but you have to get it done because you're running out of time. So let's work on it now, and then you don't have to worry about it later. So have a great week, and I'll talk to you next week.